The India is on liability of the financial statements. Unit 1 Indian Accounting Standards 19 Employee Benefits. Learning outcomes. State the objective of the scope of India is 19. We define the terms related to the employees' benefit, classification of plans, non-defined benefit liabilities, define the benefit cost. Examine the four categories of employees' benefits like short-term, post-employment, other long-term, and termination benefits. Recognition measurement of all short-term employee benefits, short-term paid absence, and the accounts of profit and sharing and bonus plans. Distinguish between the definition of contribution plans and definition of benefit plans. Account of multi-employer plans, state plans, and insured benefits. Recognizing means of definition benefit plans which rise between the entities and the common cutoff. Recognize the measurement of defined contribution plans, account of the construction obligation plans and other defined benefit plan. Apply for accrual valuation recognition measurement of defined benefit plan. Remeasure the net benefits liability using the current phase of the value of plans assets and current accrual assumption. Therefore determine the past service cost. Gain and loss settlement, recognition of components of defined benefit cost, present and disclose employee benefit in financial statement in AS 19. So in AS 19 definition related to employee benefit, classification of the plan, net definition benefit plan, defined benefit cost, employee benefit, short-term employee, past employment benefits, other long-term employee benefit, termination benefits. Termination benefit, recognition, measurement, disclosure. Other long-term employee benefit, recognition, measurement. Short-term employee benefit, recognition, measurement, disclosure. Post-employment benefit, definition of defined contribution plan, defined benefit plan. Defined contribution, recognition, measurement, disclosure, defined benefit plan, multi-employer plan, state plans, insurer plan, recognition, measurement, accounting for constructive obligation, present value defined benefits, obligation or current cost service cost, actual valuation, and recognition, measurement of plan assets, settlement of the benefit plans, settlements and settlement, presentation, disclosure. These plans are by consideration definition of contribution plan. Objective of India is 19. The objective of the standard is to prescribe the accounting and disclosure of the employee benefit. The India is 19 require the entity to recognize the liability of a service received from a liability for a service received from an employee. And the expenses of for contribution of economic benefit arising from a service provided by employee in exchange of employee benefit. The financial statements are prepared on the accrual basis of accounting. Under the basis, the effect of transaction and other events are recognized when they occur, and when the cash equivalent is received or paid. When they are recorded, the accounting records or statement reports or the financial statements or period of which they relate. The financial statement prepared on accrual basis inform the users not only the past transaction involves a payment and receipt of cash, but also the obligation to pay cash, the future and the resources that represent the cash to be received in the future. The employee provide and services to the employer during the period. The services lead to generating benefit, revenue, and profits and increasing efficiencies directly and indirectly for the employer for a period. The underlying assumption of accrual requires that the benefit earned on a particular period, cost incurred earning the benefit need to be recognized entirely. Adherence to the requirement of the framework of the address under India's 19. Employee must match the cost to the benefit. Employer benefits that revenue profit and accrual. Entity should recognize the liability of employee benefits paid and to be paid in the future respect of service provided by the employee. As benefit from the service provided by the employee in consumption, the entity should recognize the related employee benefit expenses. Employee benefit expenses. And the provided benefit like salary, leave cash and cash on leave, encashment, cash due, pension, etc. Scope. The scope of the employee benefit has evolved over the years to encompass more than just salaries, wages, and social welfare contribution. The companies today establishes startups provide a host of benefits to employees, including not limited to employee stock option plan, jubilee bonuses, long-term disability benefit, etc. In terms of companies like Google, even provide an unusual benefit such as death benefits, which people paying a descendant of domestic partner 50% of salary for 10 years after death of the employee. For 10 years after death of employee. This standard shall be applied to the employer in accounting for all the employee benefit except when those which is India is 1 or 2 shared based payment in applicable to employee stock option. The standard does not deal with the reporting by employee benefit plans. Employee benefits to which standard applies include these provides. Under the formal plans, guarantee between the entity and the individual employee. Yeah, we call formal plans guarantee between the entity and the individual employee, group of employees, and their representative as required by the law or required by type of industry arrangement whereby an entity is required to contribute to any notion any nation state industry or multi-employer plans by this informal practice that give rise to construction obligation. The informal practice give rise to construction obligation where the entity has no realistic alternative but to pay the employee benefit. For example, constructive obligation, this is change to the entity formal practice which causes unacceptable damage to its relationship to its employee. Employee benefits. Employee short benefits include short employee benefits, post-employee benefits, other long-term employee benefits, termination benefits. All these categories are different categories and hence the standards are specified separate accounting requirement for each category. Employee benefit, short-term benefits, post-employee benefits, other long-term benefits, and termination employee benefits. Employee benefits include benefits provided either to employees, their dependents, benefit their dependents and their beneficiaries. Employee benefit can be settled by payment, providing goods and service made either direct to employee, directly to spouse, directly to their children, directly to their dependents, or directly other such as insurance company. Employee may provide service to the entity in a full-time, part-time, permanent, casual, and temporary basis. For the purpose of standard employee include directors and other management persons. Employee benefit include payment in cash or equal payment by providing of goods and services. Employee benefit is paid to employee, dependent of employees, beneficial employees, or other such of insurance companies. Employee include full-time employee, part-time employee, permanent employee, casual employee, temporary employee, directors, other than management personnel. Definition. Definition of employee benefit. Employee benefit, all form of consideration given by the entity in exchange of service rendered by the employee or for a termination of employment. Short-term employee benefit. Employee benefit that are expected to be settled wholly between 12 months after the end of annual reporting period in which employees render the related service. Example, wages, salary, social security contribution, paid annual leave and sick leave. Post-employee benefits, employee benefits, other than termination, bigger benefits and short-term employee benefits that is payable after the completion of employment. Example, pension, lump sum payments and retirement. Other long-term employee benefits, other employee benefits other than short-term employee benefits, post-employment benefits or termination. Long-term paid employees such as long service leave, sabbatical leave, jubilee, other long service benefits. Termination benefits. The employee benefits provide exchange for the termination of employee's employment and the result either the entity declaration to termination of the employee's employment before the normal retirement date or the employees decide to accept an offer or benefits in exchange of the termination of the employee. VSR compensation and detachment compensation. Types of employees: short-term basis, post-employment basis, other long-term employees, and termination employees. Short-term basis expected to settle wholly before 12 months after the end of the annual reporting period in which the employee rendered the related service. Post-employment benefits they payable after the completion of employment other than termination benefits, short-term benefits. Other long-term employee benefits, other short-term and post-employment termination benefits. Termination benefits provide exchange for termination and employee's employment. A definition relating to the classification of plans, post-employment related benefits. These plans are formal informal arrangement under which the entity provides a post-settlement benefits for one or more employees. Under these plans, benefits to give that employees after the employment like gratuity, pension, provident fund, etc. Define the contribution plans and define benefit plans to two categories: post-employment and benefit. Define the contribution plans. They are post-employment benefit plans under which an entity pays a fixed contribution into separate entity, as it has no legal or constructive obligation to pay the future contribution. For if the fund does not hold sufficient assets to pay all the employee benefit relating to the employee service in the current or period. For these plans, contribution is different. The contribution is fixed and known to the entity. Provident fund contribution, the employee to employee, an organization under the Ministry of Labour, Employment, Government of India. Other benefit plans. Post employment benefit plans or different contribution gratuities. Multi-employer plans. The defined contribution plans other than the state employees defined and the benefit plans. Pool that assets contributed by variety of entities that that are not under common pool. Under these assets to provide benefit to the employees for more than one entity on the basis of contribution and benefit level of determining whether without regarding the identity of the entity that employee or employees benefit to the employees more than one entity on the basis of the contribution and benefit are determined without regarding the identity of the entity that employees. Definition of relating to the non-defined benefit liability asset. The non-defined benefit liability, the defect and surplus adjustment for any effect of limited, not defined benefit assets to call the asset ceiling. Deficit and surplus. The present value of the defined benefit obligation is less the fair value of plan of asset if any. Asset ceiling. The present value of the economic benefit available in the form of refund for the plan or reduction in the future contribution to the plan. Present value of definition benefit obligation. The present value without reduction any plan assets for expected future payments required to settle the obligation resulted from the employee service in the current or prior periods. Plan assets comprises asset held by the long-term employee benefit fund and qualifying insurance policies. Asset held by long-term employee benefit fund. Assets other than non-transferable financial instruments include by a reporting entity that held by the entity a fund that is legally separate from the reporting entity and exists solely to pay the fund of employee benefits are available to used only to pay the fund of employment as not available for the reporting entities non-creditors and cannot be returned to the reporting entity unless either the remaining assets of the funds are sufficient to meet all the related employee benefit obligation of the plan or to the reporting entities. Other assets are returned to the reporting entity to reimburse it for employees' benefit and absolute benefit. Qualifying insurance policy. This insurance policy is issued by the insurer that is not a related party. India's related party disclosure. The reporting entity is if the process of the policy can be used only to pay the fund employee benefit under the definition of benefit plan. It is not available to the reporting entity's own creditors and cannot be paid to the reporting entities unless either the process present surplus assets that not needed for the policy to meet all the related employee benefit obligation in the process or returned to the reporting entity to reimburse it for employees benefit already paid. Fair value, the price that is would be received to sell an asset and pay to transfer the liability, an orderly transaction between the market participation at the measurement date. India is 113 fair value measurement. Definition relating to the defined benefit cost. Service cost comprises of current service cost, past service cost. Current service cost, which is increase in present value of the defined benefit obligation result from the employee service in current period. Past service cost, which is a change of present value of defined benefit obligation for an employee service in a prior period result from the plan amendment, the introduction or withdrawal of or changes to a defined benefit plan or an curtailment, a significant reduction by the entity to the number of employees covered by the plan, or any gain or loss settlement. Net interest on the net benefit plan liability. The changes during the period in the net defined benefit liability that arises from the passage of time. Remeasurement of the net defined benefit plan comprises of actuary gain or loss, the return on plan asset excluding as a amount included the net interest on the net defined benefit asset, and a change in the effect of asset ceiling excluding the amount included net interest with net defined benefit plan. Accrual gain or loss. Changes in the present value of defined benefit and obligation form. The experience adjustment of effect of defined difference between the previous actuarial assumption on the actual occurrence. Effect of changes in actual assumptions. The return on plan assets. The interest definition, interest, dividend, and other income derived from the plan assets together, which is realized and unrealized gain or loss on the plan assets. less the cost of managing the plan asset and the tax payable on the plan itself other than the tax incurred in the actual assumption used in the measurement of percent value of the defined benefit application. A transaction that eliminates all the future legal constructive obligation for the part of all the benefit provided under the defined benefit plan, other than the payment of benefit to benefit of an employee that set off the terms of plans including actuary assumptions. The short-term employee benefit. The short-term employee benefits includes items expected to settle wholly before 12 months after the end of the annual reporting period in which employer entered the related service. It includes wages, salary, social security contribution, paid annual leave, paid sick leave, profit sharing, and bonuses. Non-monetary benefits include medical care, housing, car free, subsidiary goods, service, and other current employee. Short-term employee benefits include wages, salary, social security contribution, paid annual leave, paid sick leave, profit sharing, and bonuses. Non-monetary benefits like medical care, housing, car free for subsidiary goods, services, such current employees. Reclassification of the short-term employee benefits is not required if the entity expected or the timing of settlement of such benefit changed temporarily. Reclassification may be considered if the consideration on characteristic of the benefit changes, such as change from a non-accumulating benefit to accumulating benefit, or if a change is expected of the timing of settlement is not temporary. And recognition and measurement of short-term basis. Accounting for short-term benefits are two categories. Short-term benefits are measured on the undiscounted basis. Why they don't involve any actuary evaluation for their measurement. The undiscounted amount of short-term employee benefits expected to be paid in exchange for the service shall be recognized as a liability as a expenses. As a liability, accrued expenses after deduction of the amount already paid. If the amount is already paid, excess, the undiscounted amount of the benefit, the entity shall recognize the excess as an asset to the extent that repayment will be lead to, for example, reduction in the future payment of cash and refund. At expense, if they don't form a part of the cost of asset as per the India AS, example India AS 2, inventory and India 16, plant property equipment. Recognition of short-term employee benefit is a form of either paid benefit expenses or profit sharing bonus plans. Short-term paid absence. An employer may compensate an employee for absence of various reasons, including holiday, sickness, short-term liability, maternity, paternity, jury services, military services, entitled to paid absences. That is, compensation balances fall into two categories. They are recognized: accumulating, non-accumulating. Accumulating paid absences recognized when the employee renders service that increase the entitlement to future paid absences. Non-accumulating paid absences recognized when the absence occurs. Accumulating paid absences. These are the absences they are carried forward and can be used in the future period if the employee is not able to use them in the current reporting period of the employer. They can be either vesting, non-vesting. Vesting in the case of employees entitled to no cash payment, non-cash payment for the employee's entitlement at the time of leaving the entity. Non-vesting in the case employees not entitled to cash payment for the unused entitled on leaving. The obligation exists and recognition even if the paid compensation absentees or non-vesting. However, in the case of employees leaves the entity before they used on accumulated non-vesting entity, it will affect the measurement of the obligation. Entity shall measure the expected cost of accumulating paid absences as the additional amount that the entity expect to pay as a result of unused entitlement. They are accumulated at the end of the reporting period.